I just want to go back.
Okay then guys, let's get a little bit deeper into the markings. Let's see if we can simplify markings and go from there. So let's have a look at the right hand chart. Now this is the oil that we just went over. As you can see on oil, I'd like to also point out that there's a lot of empty space here. A lot of empty space from the breakout of the high point, which obviously is the low point over here. Okay, so if I move that in so we can understand this fully, to the full extent. So oil, we had the low, and I brought the region across, say from the wick. And again, if we really want to, we can go ahead, grab our horizontal ray tool, tap it on, right to the base low, extend that. Market died. Market broke that structural level with great velocity, if you will. And these are the points that, again, we want to keep our eye on in the market, because look at the big drop and look at the empty space we still have. So from the pullback into the region where we can actually go ahead and expect a new higher low. So we have higher low, higher low, higher low. Look at the wicks. Can you see the momentum that comes after the wicks? The wick will drive into a price range. So if I focus over here on the daily chart, I bring my box tool and I bring it across. So we have all of these wicks. If I just try to find the average, we can, if we really want to, go ahead and put the ray on there. Try to neaten that up a little bit. What we can see is that price spike back through, bullish engulfing, back to the upside, pull back in, spike 1, spike 2 on the edge, spike 3, taken out, coming all the way back in. So this region was quite important for oil, anywhere around 51.35 and 52. As you can see there straight after that. So as an entry, we're going to only be looking for maybe 2 or 3 entry signals. So as an entry, what we can actually do, depending on our confidence, and again, this is going to help us greatly with the confidence. If I just look at where that spike is on the chart over here to the upside, sorry, look how this comes together. So some people may not have too much confidence in taking along after this spike. What we could do on the daily, we can enter directly off the daily. Obviously on the 4 hour and the hourly, the setups and the candles are going to be looking the same. So once we get a closure back above, the daily then starts to thrust to the upside. The liquidity was filled, the orders were filled here, the market's done what it needed to do. Again, many consolidation zones and these structural levels hold the keys and hold the power, okay, and we have to focus on the fine details in order to actually get this right. Spike straight in, sorry about the noise by the way, crazy over here in central London. Spike through, boom, rush. Now look over here. If we just focus on the spikes on the right hand chart, we can see clearly spike, 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 spike in, rejections, again spike in, spike on the base, spike straight through, rejection, and then the market starts to roll over. But obviously, guys, bringing this together, if you're not confident to hold the long trade, the chart on the right hand side allows you to gain that confidence and gain and grab and get that solid firm grab on the market. And then as you're monitoring, this is the most important point, as you're monitoring the price go up into your profit, over here it's sinking down, we have the wicks. Imagine this is just a standard downtrend. You may have more confidence to see, okay, market's falling, throwing wicks behind, which is throwing wicks obviously to the downside over here. And the peak in which we can, again, go right across, draw another region on, again, draw on your line tool, your horizontal ray. Look at this, it's creating new structural highs, same scenario. The consolidation is where the orders are being picked up in the market for it to do its next breakout move. Many people are getting in on the breakouts. We're going to be getting in and educating ourselves on how to get into the market on the power moves. Power move way before everybody else, and then we have the retest and continuation. That's when we can scale into the orders. This is how, using both of these scenarios, I turned $4,600 into $685 before the broker fucked me, which you've already watched that video, guys. You already know what all of that is about. And this is what gave me the confidence to hold the trades. I don't condemn that way of trading, but that was a personal test, and you guys know that. That was a personal test. And look over here on the right-hand side, the right-hand axis. Boom, structural lows. Okay, the new low was formed, which was the new high. Market after a new high may consolidate for a while. This is where people are getting stopped out in the market because they're not reading the market correctly. Where people are getting stopped out, we are stepping back, we're reading it correctly, with form, with structure, with power, and then we're getting in after everybody's been stopped out. As you can see right here, rejection, boom, consolidation period. I already had that zone marked on, so it's just zone after zone, chopping the market up, maybe into the last few weeks or so, and looking at the bigger picture and exactly where the market is going and exactly where these wicks are painting the clearer picture for entries and for exits. So you should be very fucking excited about this new wave. Now, as you can see, it's starting to come together from the previous video, which I laid out, to what we're going to come back in here now, maybe even throw a huge spike below, come back up, give us the same scenarios, maybe retest the trend line, and then we're going to go to the upside to our massive, it's a fucking massive move. And again, it rolls over on the right hand side. And we hold that, and we hold that, and we have the confidence with that. Oh man, this is funny. I'm so glad I'm sharing this with you. It's been a while. This has been a while of testing, but the results were there. The results were there on the big test. See, with Astro, we like to. I know we've took our time with things, but we like to put our money where our mouth is. We have to put our money where our mouth is before actually going ahead and releasing it. The trading has elevated from the start of last year, especially this time last year when all of this came in, which is backed by results. People out there, they may try to slate this material, they may try to claim it as their own, they're going to definitely copy the material, but just know the video I showed you beforehand, I used this strategy to get those MyFX book results. And the results that you're going to see later on in this course with the Element 13 project, this is the heart of the material. It's backed, it's tried, it's tested. You have us here, psychological warfare that we have been in since the start of Astro, but we're always coming back strong, and now we're giving you the realest stuff that you could probably find in the foreign exchange market, backed by pure money, pure results, and the bigger picture, which is the fund, the Astro fund. And as you can see, we're expanding in London now in the heart of Mayfair. So oil, pull back, look for this region, and then simply put, look how clean our charts are, bang. And then we're going to make a new leg up to the upside. If we don't do that, if we actually break the structure, we could get wicks thrown back into this region, and then we could get a bull move. Maybe, obviously, we have to keep our eyes on the upside target 1, upside target 2, and so forth. So we're breaking the market up into chunks. So I hope that gives you a little bit more reasoning. So if you go into the weekly as well, you know, some of the weeklies, we are throwing spikes onto the weeklies. I don't want to get into the weeklies too much. It's better on cryptos, but again, you can actually just have a play around yourself, and I will do on some market breakdown videos. I will be playing around with that to give you guys the best of the best. But it's just about the most recent structure is the best for intraday trading and intra-week trading. That is the best. Keeping an eye, look how clean that chart is. We know exactly where to look for our entries. We know that our bias for oil, okay, over here is actually long for now because we know about this region. And why? Because huge liquidity was pumped straight through the market on that breakout. The market has space to the upside. Once it does reach 64 or 65.3, then you know what? We cross that bridge when we come to it. We know the markings. We know where potential entries are. So just going into entries for one moment, I'm going to go into this deeper on other charts. But when we get the spike into the region 1 and 2, we can enter basically or directly from the closure of that body. Number 2, what we can do is wait for the next candle to show us the momentum. And what the momentum has to do is close above the previous. So we get the open, we get the low, we get the closure. Then the next candlestick, to be a little bit more safe, we want that candle to now close above here. So 1, bang, there's your entry, closed above. It took out the previous open price of the day. Here, there we go, open, down, up, across, bang. We took out the previous open of the day. And again, this translates into lower time frames as well. Just like this here. Boom, spiked in to the top end of that box. That's why we have to be quite precise with this. If you really wanted to, you can just put it to the top of that wick there to get the range, because it is a range. It is a range. That's what we're looking for. We spike in, boom, we close back above, and momentum comes through, and that's a nice move right there. But again, what you can actually do, guys, is you could have, let's say, the 4 hourly over here, or the daily. Let's put it back onto the 4. That's the 4 hourly right there. Okay, and look, even these precise moves you can actually practice. So we have the spike to the high, then the next candlestick, boom, confirms momentum. We ride the momentum through. Over here, we can go into the hourly. If I just go backtrack, see these moves here, these are ones that will come over time, and I am going to be going into the hourly chart a lot more. Again, I'm starting from top down. I'm starting from the top down. We're going to be going into the hourly chart a lot more, spiking through, and then this is where we can get those precise entries off the spikes on the hourly. But this takes practice. So as I go along, I want to just keep it nice and formal, simplistic. As you can see here on the 4 hourly, 4 hour spike there, and that there, guys, if I zoom in, this is a 4 hour example. We've got the spike, you can enter off the spike on the closure, but boom, the next candlestick has broke back above the previous 4 hour, daily, whatever it may be, whatever candlestick, and then momentum continues to shoot off, and so on and so forth. So another example would be here, nice hammer candle coming in, and that there is a decent entry in itself because it's closed green rather than red. Both of them, to be honest, are pretty decent, but here's better still because you know what? After this candle, we've come back above the structured region, come back above where our horizontal ray tool is, and then that's why we put the ray tool on there, because that gives us guidance when the market breaks down or breaks above, and then we can actually go into the market with clean precision. And basically what we're waiting for over here, if I put up the 4 hour or even the daily, because again, we always want to switch in between both, checking out the end of the day, end of the 4 hour. If the day gets pushed into this region, and maybe even the day forms a spike or the 4 hour forms a spike off this to reject it, we can sniper in. This is where the real sniper entries lie. We are not entering various times. Okay, we're not entering various times on a chart and then deleting our entries and then showing it on Instagram. That is not what we are about. That is bullshit. This is where it lies, clean precision, but it comes with practice. Again, I can't simply just teach this. I can show you the way, and you can actually light up your own tunnel. Down, boom, into this zone, and then we can look for certain levels like this being tapped off with the candles. But you know, okay, this is a very important level. Liquidity lies here. Let's look for a volatile move back to the upside, and that is where we're headed, into those regions. But again, I'm trying to clean up your charts, be more concise with it all. Over here, if we do the horizontal line, put it at the top of those candles right there. Oops, sorry, my bad. Horizontal ray, sorry. Horizontal ray. And there we go, guys. Obviously, we always want to look at news and work around the news. We want to work around all of that. Fundamental section is coming up, highly advanced. So that's that. We're going to come back to the markings later on. I'll throw in a few other currency pairs, and I'll go maybe to dollar CAD. What haven't I done yet? Maybe gold. I can maybe fill in some info on gold. I'll get back to that later on, but I just want to break up the section and go into psychological levels and also breakout regions and breakout boxes. Okay, thank you.
I just want to go back.